Yeah, well, Joe, that is the worst case scenario. That would be a 20% effective tariff. So that would put the tariff rate back to where we were Smoot-Hawley 1930s depression.
Hmm.
So that's pretty extreme. I also, in that scenario, assume full retaliation. So China and everyone else retaliates in kind. So that's kind of a bookend. But if we got it, that would be a very severe downturn. Unemployment would go from 4 currently to 7 plus over the next year and a half. So it'd be pretty serious. So I don't expect
Mhm.
that, but that kind of gives you a sense of magnitude. I mean, my sense, Joe, and obviously this can go in lots of different directions in a couple hours, but my sense is that the president's going to try to figure out a way to give himself an exit strategy just in case things go
Mm.
off the rails. So something to the effect that, well, we're going to raise tariffs, but if other countries lower theirs, we'll lower ours as well, and that will give him a way to pivot and move on. And that's why in my
Yeah.
baseline worldview, the kind of what I think actually is going to happen here, I don't have a recession because I think he's going to figure out a way to pivot, declare victory,
Okay.
and move on. He's pretty good at that.
Well, so would that then, if it is an imposition of tariffs, but then they are either reduced or taken away entirely in relatively short order, Mark, that would feed into the transitory narrative, right? You may see a price adjustment, but they could easily adjust back, or at the very least wouldn't keep climbing.
Yeah, no, that's right. I mean, I'll take that. You could give me that scenario. I mean, what we've been through here is not good. We came into the year with a really solid, well-growing economy, and economy is now struggling. But there's still the economy is still in a good fundamental place. I think if we pivot here on economic policy, particularly the trade policy here quickly, the economy will regain its footing, and we should be fine. And by the way, that may be what the stock market's signaling here. Stock investors are kind of thinking along the same lines that the president will figure a way out of this without actually raising those tariffs to 20%.
So if we kind of play this out a little bit more, and we see tariffs from other countries come down, if the president succeeds in zeroing out, so to speak, our trade relationship with some of our more important partners, does this end up being a win? Are we talking about new levels of growth, a market that springs back to attention in that world?
Well, a win. I mean, when the president took office, the effective tariff rate was what, 2.5 to 3%. A win would be getting back down to 2.5 to 3% and lower than that.
Okay.
I
Yeah.
suspect that's
Mm.
not in the cards. So, but maybe we avert 20%. Maybe we get them back down to 3, 4, or 5, something like that. I'd take it, but I don't know that I go so far as to declare a win. I'm sure the president's going to declare it a win, but from my vantage point, I'm not sure I'd think of that as a victory.
Well, something else he says is a win are investments that have already been announced into the United States in terms of manufacturing capacity. He anticipates that more of that will be happening as you won't face a tariff if you make it in the United States. But Mark, how long exactly will it take for that extra productive capacity to be realized, to build these factories, to get the appropriate workers, to actually have the output ready and available and supplying the market?
Come on, Kaylee, come on. Think about this for 3 seconds. Okay, you're a CEO of a global manufacturing firm, and you're trying to decide, should I invest in the United States? Next question you're going to ask is, well, what are the tariffs? And what are they going to be tomorrow? And what are they going to be a year from now? And because it takes, say, I'm a vehicle manufacturer, it takes 3 years to put up a vehicle manufacturing plant. What are they going to be in 3 years? And oh, by the way, I want that plant to be around for what, 2, 3 decades? What are the tariffs going to be 2, 3 decades from now? These tariffs, even if we got crystal clear clarity on the tariffs today, this is exactly what they are. And I'm telling you, they're going to stay there. Does anyone believe that? I mean, these are done under executive order. It's not written in legislation. Can be wiped out with the stroke of a pen and likely would be. So I just don't see that argument. I don't get it. And there have been announcements, of manufacturers saying, "Oh, I'm going to invest in the country," but how do we know they wouldn't happen anyway? And how do we know they're actually going to follow through? You remember Foxconn?
Hmm.
Go back to the
Mm-hmm.
Yep.
President Trump's first term. Foxconn was this uh, round number, $10 billion. That sounds familiar. Hyundai is also $10 billion. $10 billion investment. Go take a look at what's actually invested right now. So
Mm.
I don't get it. I just don't see how tariffs done under executive order, and maybe they're not even legal. Are they legal? I'm not sure. Are they? I mean, I'm sure they're going to be tested in the court system, and maybe we figure this out 3 years later. But again, I'm the CEO trying to figure out whether this investment
Right.
I'm going to make makes any sense three
Okay.
years from now. Does it make any sense?
So if you're that CEO, you're making cars on both sides of the border here, some in Michigan, some in Canada. Mark Zandi, you just grin and bear it, knowing these things go away in a couple of years, as opposed to moving your manufacturing back to the U.S.
Yeah, I mean, I think what I would do is I figure out different trading patterns, different supply chains. Who am I going to sell to? I mean, the U.S. is not a reliable partner. I'm going to sell into it because it's a big market. I'm going to do my best, but I'm going to look for other markets and other ways of doing business. So, but to actually make a big investment based on those tariffs, I don't know how you do that. I just don't see it.
Well, and I wonder, Mark, how you're viewing this notion that these tariffs are not being imposed in a vacuum, that they're coming in tandem with an effort to reduce the size of the federal government and cut federal spending, also with the aim of cutting taxes at some point before the end of the year. Keeping in mind that during the first trade war and the first Trump administration, there was a subsidization effort for farmers specifically who were caught up in the retaliatory fire. Do you think that kind of subsidizing or stimulating to try to offset the effects is likely to happen this time around, given those new dynamics at play?
Yeah, it's certainly possible. I mean, one of the interesting kind of conversations recently is, suppose you put in these high tariffs, say it's 15%, 20%, on if you kind of do the simple arithmetic, you take the 15, 20%, you multiply by the amount of imported product that is tariffed, and you get a revenue number. You say, oh, look at all the revenue I'm creating. But that abstracts from the fact that when you raise price, demand falls. So if I'm going to raise the price of a vehicle, I'm going to sell less vehicles. So imports are going to decline, trade volumes are going to decline. It also ignores the fact that if you had those kind of actually impose those kinds of tariffs, you would get retaliation and you would get a recession. And if you got a recession, what would that do to tax revenue and to government spending? And then on top of that, to your point, there's going to be aggrieved parties. In President Trump's first term, it was the farmers. They got crushed by China saying, "I'm not buying your stuff," and they're doing that again already. And the farmers are struggling again already. And they say, please help bail me out. Effectively, give me a check to compensate for that, and that's a cost. So you add this all, up. You say, well, what at the end of the day, how much revenue am I actually going to generate? And by the way, I don't think the tariffs get beyond a year if you actually were 15 or 20% and you go into recession. So you can't count on those revenues going forward. So you can't say, oh, over the next 10 years, I'm going to generate X, because these tariffs aren't going to be there over the next 10 years. So that whole argument, I'm going to raise a lot of revenue, I find very specious.
Mark, I've only got a minute. Word is we're not going to see paper until after the president speaks. So in our remaining moment, what's the most important thing you're going to be waiting to hear from Donald Trump?
Well, I mean, I'm listening to that top line number, and then I'm going to look for an exit strategy, because if things don't go as planned, how do I get out of this in a reasonably graceful way? And so I'll be looking for that. If there's no exit strategy, then I get more concerned, but if there's some, I lower tariffs and if you lower tariffs, I lower tariffs, and you have that kind of mechanism built in, then I feel more comfortable with that. And I say, okay, this is going to play out like my baseline. We're not going into recession.